Good afternoon. My name's Chris Brown from Morgans Financial, and we're here in the afternoon of the third day of the Noosa Mining and Exploration Conference, and it's been quite exhausting. You can still hear there are a lot of people making noise in the background and attending the conference. Maybe talking to Kyle Williams, who's also an analyst at Morgans. Kyle, maybe what do you think the mood's been like here? This is my 12th conference. How is it for you?
Yeah, look, the first day was really strong. We had 700 delegates come, and it's been building ever since. So yesterday was a really strong turnout, and the mood's been quite positive as we've seen commodities have sort of gone quite well lately in the last few days. So yeah, a lot of the juniors are kind of, I think, turning on the market. Could be a turning point for them, which is interesting.
This is a largely a junior conference, and I think that, to me, the mood is that while things might get weaker and a bit worse, there's some really good value out there now, and some people are starting to look at it. I think the hard-bitten thrill seekers can see upside from here. I'm sure there's a bit of risk. What about the themes that you've seen here? What are the investors interested in? I don't mean us. What are the investors interested in?
Well, I think at Noosa, so we've got a big range of companies. You got your gold explorers, energy, so lithium, some graphite guys. There's a big mixture of different types of commodities here, which is great. And the energy theme is still strong. We've seen that in the investment in the last 2 years in nickel, lithium, graphite. But look, gold itself is still a big sort of play in the junior sector, and you know the themes have held strong. I think investors are keen to find out what's sort of the next high value stock, and it's been really good, I think.
Yeah, look, I'd agree with that. I think the patient capital investors are moving into the sector now. They're not looking for something to go up next week. They're probably not even terrified if it goes down 10 or 15%, but they know that in 12 months, 2 years' time, they'll be looking at good earnings. I'd agree with Kyle. There's a lot of interest in the battery minerals and things that are going to be involved in the electrification, and to me that's copper's the obvious dominant one there, but nickel, as Kyle said, and obviously the lithium and graphite and rare earths and all those associated commodities, but also the industrial metals. I mean, EQ Resources gave a good talk first thing this morning on tungsten and the control that China has with 83% of the market and Russia with another 7%. So there's not much in the rest of the world, and it's needed for everything: jet engines, armaments and armor-piercing shells, but mainly for drill bits. You want to drill a blast hole for a mine, you need tungsten. You want to drill an oil well, you need tungsten. And they're all going to be more required, given that we're going to need more commodities for the electrification. So yeah, I think it's been a positive move, and as you say, a broad focus. I'm a bit keen on the golds because it's much easier for a junior resource company to finance a gold project than perhaps something a little bit more complex like a polymetallic sulfide deposit. But there are investors interested in both, given the risk.
Yeah, and also, we've got Strandline Resources here, heavy mineral sands producer. They'll be producing their first concentrate Q4, and that's a really exciting bulk commodity story. And we've also got Metallica Minerals up in far north Queensland, which is a high purity silica project, and that's used in the ever growing solar PV panel market. So there is a big range of commodities here that are quite exciting to investors looking for something new to have a punt in, and there's a lot of sort of long-term stories as well.
And maybe we can say that we've seen the tide going out now in resources, and it's going to come back in. And when the tide comes back in, all boats will float.